financial freedom. 2053. 2053. What's going on? We're talking about preparing for retirement so that you're not one of the median African Americans that are basically at a zero net worth. So we talked about what net worth is already. So first things first, what does that article mean where it says by 2053? Excuse me. Ooh, sorry. By 2053, the median Black wealth will be 0. All right, what is wealth? First of all, wealth is considered in that article. Wealth is your net worth, and we talked about what net worth is. Net worth is assets minus liabilities. And I told you that a lot of people have a negative net worth. Why? Because they have more liabilities, more of their debt than they have assets. So for instance, if you have a car loan, credit card debt, student loan, and a mortgage of a big house, you most likely have negative net worth. I don't care what you're driving. I don't care how rich you look. When you put your numbers down, you're negative. Because, I mean, most of us are not born into wealth. And so if the only asset you have is a car, which is a depreciating item, meaning you basically paid $30,000 for a car that's now worth $20,000. If you still have a debt on that car, from the moment you drive off that lot, you're negative $10,000. Let's not even discuss the student loans, which some of you have hundreds of $1,000s in debt. So unless you have some kind of asset that's worth more than $100,000, some of you are negative $100,000, negative $50,000. Now the house is considered an asset, but for most people, it's a liability, because between the taxes, HOA fees, and the debt that you have and the interest you're paying, if you're not paying extra on the loan, and you're not getting tax write-offs for the PMI, nor the, especially for those of you who live in expensive states, a lot of you're not getting hefty tax write-offs for it. It's not appreciating as fast as the interest is, you're in trouble. So, unfortunately, African Americans, number one, buy a lot of depreciating items that lose value upon purchase. And because of unfair practices, they live in neighborhoods in which the property value depreciates based on just the fact that Black people live there. I mean, one of the major reasons why there was a heavy fight against integration in the 70s, when Dr. King in the late 60s was trying to go to Chicago, for instance, and they just basically ran him out of town, is because when you try to have Black people live in white neighborhoods, it automatically, especially in those days, depreciated the property value. And it doesn't even matter how much money you make. Like, I was talking to some person, you get a better deal as a white person making $30,000 than a Black person making $80,000 in terms of interest, in terms of property value. That's just the way it is. It's injustice of the country, where we call it redlining, it's crazy. it's unfair. So a lot of the reasons why the wealth gap is there for African Americans, hey Paul, hey Louisa, is literally because of injustice. So never mind that. Um, in spite of the injustice, we also make bad decisions. So we know there's injustice. We say that, but we buy depreciating items. We buy items that depreciate in value much more. We hardly invest in ourselves. We don't invest in the stock market. Um, and so if the majority of our wealth is in our home, which swings based on our own color, you understand what I'm saying? The more black people that we live with, the less value the house is. Then and especially when crashes happen, our communities are the first communities to depreciate in value dramatically. So our wealth can't solely be in the house, but that's the problem. The problem is the majority of our wealth is in our home. We do not invest in the stock market. We do not build businesses, create businesses, and create assets that grow. So that is why the median wealth of Black Americans will fall to zero by 2053. That's what the statisticians are saying. What does median mean? That just means the middle of the, basically the halfway mark. So basically 50% of people will have negative net worth and 50% of Black people will have positive net worth, and the person in the middle will have zero. And that part where we're equal, where the same number of people have negative as they have positive, that's negative 53. And that's a lot of people. So it's not meant to scare, it's like people, I don't like the way it was written, it's, how, what they do. Everybody's not going to be broke. That's not what this article is saying. It's just saying that, you don't want to be on the wrong side of history. So how do you not be on the wrong side of history in terms of wealth building? You have to think outside of the box when it comes to investments. We have to stop buying depreciating items. We have to invest wisely. We have to pay our debt down. All right. So, I'm passionate about, I hate debt with a passion. I just don't like it. So, and one of the foundations of our wealth is reduction of debt. So, what are 6 ways to be on the right side of history? Basically, to prepare for 2053. 2053 is what, 30 years from now? 35 years from now? Let's do the math. 2053 minus, what's today's date? 2019. That's 34 years from now. All right. So a lot of us will be retired in 2053. Right? A lot of the millennials will be turning 64, 65 years old at this in 2053. Are you ready for are you preparing yourself for 2053 should time last? All right. So what are the 6 ways to be prepared for retirement? Meaning, how do you get to 2053 having a positive net worth, but not just having a positive net worth, a net worth, and wealth, meaning being able to sustain yourself without working. Shout out to all the retired people. That's what retirement means. I don't believe you should ever stop working. But retirement means, like my mother, she's retired. If she wants to get up and go somewhere, she can. She sustains herself without working. She's free. Okay? And can you build yourself to the point where you can sustain yourself without working? 6 ways. Number 1, first way is, sorry, The first way is to open an account already. What are you waiting for? I've been telling you to open a Roth IRA for the past year. Have you opened up the Roth IRA yet? Please go to my favorite, not like I'm getting any money from them, Charles Schwab. I like them because they have buildings that you can go to. They have free seminars that they give to help you in retirement, to teach you. I love that. Go to Charles Schwab and open up an account. Roth IRA, not traditional, not a 401k, a Roth IRA. Why? Because I believe that the taxes are going to get us in the future. It's better to pay taxes now than 2053. We are in such a great deficit that it is inevitable. Both Democrats and Republicans know that the taxes are going to go back to the earlier days, where back in the days where actually life was actually better, they were taxing people at 70, 80, 90% of their income. And that seemed not fair, but I'm telling you, it was better. There were no deficits. We had a lot of opportunities for people. I believe in a high tax rate, so I'm not tripping off of it. But you might as well pay your taxes now so that in the future it will grow tax-free. I predict that in the future the taxes will be much higher. So when you remove your money out of the Roth IRA, and God willing, in 2053, you won't be taxed on it. If you do traditional or 401ks, you're going to be taxed on it, and it's going to be crazy in the future. So will you please open up an account, and you need to be saving at least 10. The standard is 15% of your gross income. What does that mean? If you make $3,000 a month gross, I'm not talking about what you get in your pocket, before taxes, $3,000 a month. That's what, about $36,000 a year. If you make that, for instance, you are putting in what's 300 plus 150, $450 a month. And that is perfect because you can only put that much in the Roth IRA. Roth IRAs are limited. So you can only put $5,500 a year. So $450 is perfect. For those of you who make more than that, you need to be putting the rest of the money, right? So if let's say you make $7,000 a month, well, you need to be putting $1,000 every month away into first the Roth IRA, and then the leftover money that you can't put in the Roth IRA, you put in your HSA if you have one, your health savings account. That also moves tax free, and you can take care of your elder care, your health care in 2053 without being broken. And then whatever's left from that, because you only could put about $33,000 in there a year, so you still have more money left, and that's when you get a brokerage account, a standard brokerage account, which will be taxed. All right. Step 1. Hey, Dimitri, how you doing? Number 1, in order to prepare for retirement, you got to open up a stock market account. Quick, fast, in a hurry. First, the Roth IRA, which is tax-free. Then a HSA, which is tax-free. Then just a plain brokerage account, which is you do that with Schwab. Shout out to Charles Schwab. Number two, we're talking about 6 ways to prepare for retirement so that in 2053, you're not one of the median Black people that will have a zero net worth. Okay? Take advantage of free money. Free money. Okay, so what is free money? Free money is whatever matches. Hey, Sophie. Hey, Sydney. Sydney. Sidney, I think that's how I pronounce it. Take advantage of free money. Okay, so the only time I say that you should put money in a 401k is the match. As I said before, I think the 401k is highly taxed. It will be highly taxed in 2053. And so the foundational should, to me, would be the Roth and HSA, which are not taxed. If you have a 401k that matches, if they say, well, if you put in $1,000, we'll match 1,000, then okay, fine, that's free money. That's free money. Put in the 401k, because but I would only go up to the match. Only up to the match. Don't just put money in a 401k. I'm sorry. 401ks don't have good. It's not. I don't think it's a good vehicle. It doesn't have a lot. It's not tax friendly. When you're 70, they'll be forcing you to take the money out. And suppose the stock market is crashing when you're 70, and you have to take money out when you should be actually putting money in. Like, I don't like 401ks. I think people don't understand. I think when you do your own thing, you teach yourself better than just putting your money in an account and they just choose stuff for you and you don't even know what you're saying. It has high fees. Yeah. But since they're giving you a match, that's free money. So do up to the match. Step 2, take advantage of free money. Basically, whatever they match, up to the match, and then you stop there and you start investing in other things, including your debt. All right. So number 3, how do you prepare for retirement now so that by 2053 you're not broke as a joke, right? Understand what compound interest is. Okay. Compound interest, meaning the earlier you invest, the more money compounds upon top of itself. They gave an example. If you're 25 and you invest $12,000, that thing when you're 65 will be $90,000. As compared if you wait till you're 35, you only make $50,000. Why? What's the $40,000 difference? 10 years of compound interest. Meaning, if I put $1,000 in and I gain 10% that year, I no longer have $1,000. I have $1,100, and I will now get interest, another 10% on not the 1,000, but the 1,100, which will add an extra $110 to it. You understand? So it compounds. I didn't do anything. I just put $1,000 in, and in a year I have $1,300 because it compounded. It compounded. You have to understand how compound interest work. Compound interest works against us. Most of us get messed up by compound. You know how? It's called student loans and car loans and student loans and credit card debt. It's funny. I paid off my car with a credit card. I didn't really pay it off directly with a credit card, but basically I finagled where I was using my 0% credit card to take out credit, and then I just threw my money at my debt. So I'm credit card debt free and I'm car loan debt free. But what happened was I slowly paid off the credit card debt over a year because I had a 0%, and I quickly paid off my car loan. So basically, I saved interest from my car loan by paying 0% interest on my credit card. You should try it sometime. Those of you who are really good, like you have a consistent job. You'll pretty much have a job for the next 5 years or so. You're not messing up, and you're really good at paying. Like, you can basically and you have a good credit line, you can take a chunk of your high interest debt, put it in a zero, not really put it, but indirectly finagle it. Basically, anyway, if you want to know how I did it, you could talk to me offline. But so you don't pay interest on the huge debt, and then you slowly over a year pay off that huge debt. Instead of paying it off hugely step by step directly at the car loan, you do it to a 0% credit line. And that's what I did. So I did it, and something happened in the last month where I paid it off before the year was over, but they thought that I didn't pay it off or some foolishness like that. So they basically charged me interest on the last, I think, $1,000 or something like that. Let's say I had $1,000. Like, it was all on the right timing. Like, I paid it off on the 1st and I should have paid it off on the 29th. Some foolishness like that. I call them immediately because they know we have a good relationship. Shout out to Citibank. And so they waived it. But at first, they were charging me interest on that $1,000. You know how much that was? It was $30. Now, to you, that was like, oh, it's just $30. No, 30. I don't believe in finance charges. Like, I pay off my debt. But imagine $30 a month just because I didn't pay it off to 0. Right? That's on top of, it compounds. So the next month it'll be 1,030. And next month it'll be 1,000. It's crazy. It compounds. So they do that to us with car loans. They do that to us with student loans. 5%. Imagine what's 5% of $100,000, right? 5% a year, guys. A year. So 10% of $100,000 is $10,000. So 5% is $5,000. So if I have $100,000 debt, next year it'll be $105,000, and then the 5% will be based on the $105,000, not the $100,000. So every year I pay off $100. Imagine some of us who have $100,000 of debt, we're only paying $300 for our bill. Like, we've gotten to, like, we just pay $300. Well, $300 is just $3,600. So I pay off $3,600, but I owe $5,000. So I don't even pay off the interest. I don't even pay off the interest. So you wonder why it takes forever just to pay off a loan. It's because of compound interest. And if you don't respect the concept of compound interest, you're going to let banks, loan companies, credit card companies mess you up. Pay off that debt and use compound interest against the banks. Have a stock market account. Will you buy? I need you to please order that. Get that stock market account. All right. Increase your earning. We're talking about 6 ways to prepare for retirement. 2053. We want to be ready by 2053. So we're on the positive side of that black wealth and not the negative side of the black wealth. All right. So how do you increase your earning? Well, education. There's a role for education, but you got to get a career that makes you money. It's time for us to stop just going to school to get these degrees, pay hundreds of $1,000s and getting no return on investment. Paying hundreds of $1,000s for a degree that only pays you $20,000 a year is crazy. It's crazy. We need to be better at choosing our careers. Hey guys, I see people watching. Just comment. Make some points. Let's have a discussion. Tell me what you think about what I'm saying. If you like what I'm saying, say you like what I'm saying. If you disagree with what I'm saying, please tell me you disagree and why you disagree. Tell me where you're watching from. Talk to me. All right. So, get a new job. Get a job that pays well. Start a business. Get multiple streams of income. We talked about that last time. Invest in the stock market. Diversify. Right? So really, you got to increase your earnings. And it's best to increase earnings that are not heavily taxable. For instance, when you get into a business, when you own a business, you get paid first. You spend all your money on on expenses, and then you pay taxes. So if I get paid a $200 a month, right, from my side business, I don't have to pay, what they make me pay with my job, which is like, 10, 20%, 20 in the 25 percentile range or whatever. What do? I pay my expenses. I do all of that, whatever my expenses are. And if I'm left with $50 after my expenses, guess what I'm paying the 25% on? The 50, not the 200. You see, listen, this is why business people make the money. They live off their wealth first, and then whatever's left over, they tax. When we get paid all these beautiful, we six-figure incomes, whatever, they're taking 50% of our six-figure income. So if you make $100,000, they're taking $50,000 first, and then you have to then take the $50,000 that you have and somehow work with it. First, if your business takes in $100,000, you have $100,000 to work with. You get all kinds of stuff that you want as an expense, and you leave yourself with just $20,000 profit, and then that's what they tax you on. So instead of taking $50,000 from you, listen to what I'm saying. If you get $100,000 a year of business, the government won't take $50,000 from you. After your expenses and you're only left with $20,000, they'll take $10,000 from you. So two people, both making $100,000, one via work, one via business. The government takes $50,000 from them, takes $10,000 from someone else. That's how we have to start thinking. We have to start creating our own businesses and hiring people. How are we going to get the Black wealth from being zero in 2053? We got to create our own. We got to. I see all your questions coming. Keep the questions coming, and I'll answer them next. Get out of debt. Foundational. Get out of debt. The reason why in 2053, I think the median income for Black Americans will be zero is because we just have so much debt. Our net worth is negative. I talked about that earlier. We can have all the houses and cars and all that stuff we want. Those are many of it is depreciating items. We haven't invested in other things. Like I see Sydney talking about real estate. Yep. We're not investing in assets that are appreciable. And so our debts are going to consume us. The compound interest is fighting against us. So what do we need to do? We need to get out of debt. Stop taking out loans. Stop taking out loans. Prepare your children to do excellent in school, especially STEM careers, which you get great jobs. Shout out to Phenomenal STEMists. That's my job. I'm having a phenomenal STEM camp this summer. Gotta put your kids in my STEM camp. Go to www.phenomenalstemist.com. I digress. You got to get your kids scholarships so that they're prepared and they go to school for free. They're not having heavy student loans. Stop buying depreciable cars. Stop buying brand new cars. Nobody should get a brand new car. Nobody. I don't care how rich you are. No brand new cars. Get out of debt. And I think when you're out of debt, your wealth will skyrocket. Lastly, financially educate yourself. Financially, know about the different streams of income. I'm glad you guys are on here. You're getting some kind of financial education from me. I'm not necessarily a guru. All I know is I don't have a lot of debt. The only debt I have is this house, right? And I plan to be out of this thing, God willing, in the 10 years of ownership. Okay, so I'm really good at financial experience. I might not be a finance, have a degree in finance, but my experience tells you I don't have any student loans, my credit card loans, my car loans, gone. I'm pretty much, I started a business. I'm just showing you my experience, what has helped me. All right. So how did I educate myself? I went on YouTube. I read books. Shout out to this book. I don't think it's perfect, I don't think it's a perfect book, you know. He's a little arrogant, in my opinion. He kind of downs education. I wouldn't say that. I say get both. I say educate yourself and be wise with your education. All right. So YouTube, I love Charles Schwab. They, as I said before, they give free seminars to teach and pretty much read a lot of books. Educate yourself. My high school STEM program actually has a financial literacy component to it. So those of you who have kids in high school, you need to take that. All right, thank you guys. I did my 30 minutes. Let's see if let me see some questions and comments. Sidney, what you were saying? I'm about to get in the spirit of what? Spirit of getting out of debt? Spirit of owning your own business? I'm glad that you agree, though. I'm glad that you are doing that. Paying for all that student loan for degrees that don't pay you back. Yeah, man. And so many of us are guided into that, you know. Like, you know, we so many Black people, even the ones that want to do STEM, there's a drastic turn away from STEM. And a lot of it has to do with advisement. They're like, oh, you're not really, that's not, you know, you're such a nice person. You're a kind and more social. Have you ever considered social sciences? No disrespect to the social sciences, social work and psychology. If that's what you're meant to do, but I feel like we're pushed to those careers away from high paying, high sustainable careers to, you know, social sciences, counseling and social work, though they're great jobs with even consistency, they don't pay much. And how you gonna, you know, you go to school for $100,000 a year and you're coming and you're working as a counselor in let's say a substance abuse program, and you're making $30,000 a year, 20 something thousand, $30,000 a year, you know. Unless, in my opinion, it's time to start getting licensed and starting your own practices. You know, it's time to, for us, whatever we do, it's time for us to start creating businesses and not waiting on someone to pay us. Because what it does is when somebody pays us, they just take all our money. They take all our money through taxes. So if you're gonna do certain things, you gotta know financially what to do with your career. What about investing in real estate? I agree. I think there are multiple ways to invest in real estate, but I think real estate is one of the foundational areas where you get a multiple stream of income, either through rental properties. Like, you know, my goal is to have rental properties in the future. I really need help with that, though. I hope to be married because I need testosterone for that. I think men are really good at managing the issues that come with being a landlord. And so that would, you know, foundationally, I think my wealth would skyrocket if I got married to the right person, where it's the right person, not just any person, where he can handle those things, as well as just having an extra income in general. It's going to get you high wealth. But that's a key thing right there, being able to match. So you got to be able to be a landlord, though. But if you can be a landlord, or you're partnered with someone who can be an excellent landlord, man, it's the ultimate wealth builder. Sometimes they have like REITs, REIT, real estate trusts, or something like REI. I can't remember what it stands for. Those are different ways. There are different ways you can invest in real estate. But yes, real estate is one of the number one ways to have a multiple stream of income. It's the number one way to have wealth, because it's an asset. And when it's an asset and assets overpower your liabilities, that's how you have wealth. Period. Like, so too many of us have liabilities, no assets. And the only asset we have is our own personal house, which a lot of the times is a liability, because it's taking taxes from you, it's taking PMI from you, it's taking all kinds of stuff out of you. So it really doesn't, you know, negate your liability. So you need extra real estate on the side to do that. So, yep. For sure, I think real estate is, we need to do more of that. Sydney says we have business, but we don't do it to take benefits of the tax break. Yeah, I mean, I'm sorry. So that's not your. I guess you're saying it's not your goal to just get benefit of tax break, but I hope you do take the tax breaks, right? I hope that. Right? I mean, you have a business because it's your purpose. Like that's the same thing with me. I have a business because it's my purpose. Um, but I do take advantage of the tax breaks too. Sophie says yes. Be intentional about your next move career wise. Absolutely, it's time for us to be more intentional. It's time for hey Ski, what's up? It's time for us to be more intentional. What is the new slavery, Sydney? You're saying debt is debt the new slavery? I do think that is a new debt is the new slavery. Student loan debt, especially. Our kids need well-rounded education. I saw a video that says other kids are taught investing in real estate in high school. Yeah, listen, that is actually a part. I told you it's a part of my STEM program for high school. They have to learn about emotional intelligence, artificial intelligence, and financial intelligence. How to start a business, the different ways of multiple all the stuff basically that I'm teaching you. I've created a package in there where they can do watch videos, do activities. Listen, and it should happen. If I'm actually thinking about doing one for the middle school, so the 12-year-olds, six through eighth grade. I feel like between six through 12th grade, they have to have a solid education on financial intelligence, for sure. Before sixth grade, nah, because their brains are you don't want to overpower their brains. You want them to enjoy life. I don't want to stress them with that. But sixth grade, I think uh, every child should know what it means to start your own business. That's what appreciation versus depreciation means. Simple stuff like asset versus liability. Like every kid should know what an asset is. Like they should be able to do homework. That's like was kind of what this dude did in his book. I hope that you guys read it. Like literally, can you see boxes, workbook boxes that talk about income, expense, asset, liability. Being able to say this is, this is what a liability is. This is what asset is. Simple stuff like that. All right. So then he said, hallelujah to being married. But you can also get a property manager. I guess you could, but just that's like saying you can get an accountant. For people who don't know math, I feel like I want to be able to do it myself. Or when I say myself, being one with someone. I could get a property manager, but it has to be somebody I really trust because then they'll rip me off. And what's the point? So I don't know. But yeah, ultimately, yeah, it's not something that I'm not sure I wanna do by myself. But I might mature. And be ready to do that in the future. Oh, you do business legit. Yeah. And the tax people, IRS has been able to crack down on people who are just using businesses as a tax write-off. Basically, you have to have out of 5 years, 3 years of profit. So if you're just using it to get losses, that's what people usually do, to get losses so that they can lower their income so that they can get a better tax rate. That's actually going away with this new tax law. So 3 out of 5 years, you have to make a profit. So yeah, my business is legit too. My goal is to make money, not just to have a lot of tax write-off. And yes, I agree. Student loans is a new slavery. Don't be in debt. It's crazy out there. Guys, it's been great talking to you. Hey Zachary, you jumped in at the end. Please watch the replay. It's a good 40 minutes. I really enjoyed the discussion. Yo, let's not be a part of the left side of that median. Just to remind you what median means, it means the middle ground. So basically by 2053, they statistically say that the Black American community will have a median wealth of 0. What does that mean? That the same amount of people that are negative will have a negative worth, will have a positive net worth. What are we going to do about it? We got to be on the right side of history. We have to get our finances in order. And it is simple as this: make sure your assets are more than your liabilities, period. By 2053, I hope we're in heaven. But if the world should tarry, I'm sure people in the 30s wanted that as well. If the world should tarry, I think what we need to do is make sure that our assets are greater than our liabilities. Get out of debt and start investing. Have a good night. Oh, I'm seeing more questions. Okay, good. Oh yes, we have this. Well, this is part of my way of educating church believers, but I definitely plan to work with people to not just do for the church, but for everybody. When Orville started off his ministry at Patmos as stewardship leader, and he did it quite a bit. A lot of things I've learned was because of his ministry as a stewardship leader. 6, 7, 8 years ago, he had people come in. I learned a lot. So the foundation of what I know came from the church. Came from the church. All right. So we definitely need to do it. We have a room at the Cooper Complex, just sitting there. We have a TV. We could do stuff. We just gotta. We need arms. We need arms and legs, people who are willing. And of course, I'm willing. I'm definitely going to do a student loan presentation. So look out for that. All right. Yeah, we should be the head and not the tail when it comes to financial wealth. Absolutely. It's time for us to stop being in debt. It's time for us to know how to invest. 6 ways. Number 1, will you please open up an account? Open up a stock market account tomorrow. Number two, increase your earnings. Number 3, take advantage of free money. Number 4, understand financially what compound interest really means and how it's used against you and how it can be used for you. Increase your earning, get a better career, increase your earnings. Get out of debt and study finance education. All right? Have a good night.